Hello everyone. Now I'm going to take a class on history of Bitcoin. So the introduction to Bitcoin is a decentralized digital currency that was created in 2009 by an unknown group. That means Bitcoin was not created by a known person or a known popularity, but it was created by a group of people who were unknown or a single person using the pseudonym Satoshi Nakamoto. It was the first cryptocurrency to use a peer to peer network. That means there is no centralized authority for this Bitcoin. So basically, they can send the Bitcoin from one person to another person without any intermediaries. So, such as banks, etc. So, Bitcoin operates on a technology called the blockchain. Blockchain means it's like a purse. Like we have to keep the money in a purse. So, it's the same like it's a public ledger that records all the transactions. So basically, a centralized authority is not recording the transactions. That means something has to record the transaction. So that is the blockchain. Okay. Next is the early development of Bitcoin. In 2008, Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. So this the 2008 the white paper was published by Satoshi Nakamoto, a group of people or anonymous person. Though the first block of Bitcoin blockchain, known as the Genesis block, was mined by Nakamoto in January 2009. So the first block. So basically, Bitcoin is a cryptocurrency and it is not in paper; it is in a computer. So it is in a computer server, and they have to mine that to get it. So that was done by Nakamoto in January 2009. Initially, Bitcoin had little value and its main use was for experimental transactions among a small community of enthusiasts. This means that it was not as popular as now. So basically, they had it to just like a hobby or some fun thing so that they can do it in a small community. So distributed among themselves and etc. Okay, the next growing popularity and acceptance. Over time, Bitcoin gained traction and started to be accepted as a form of payment by various online merchants, including popular platforms like WordPress and Overstock. So, WordPress and Overstock and several other companies like BitTraveler, Traveler.com, and so many companies started accepting Bitcoin as for cars, flights, and even commodities. So in 2010, the first documented real world transaction with Bitcoin occurred when Laszlo Henches purchased two pizzas for 10,000 BTC. So the 10,000 BTC is millions now. So he didn't know that it was like going to be that much value. At that time, he gave 10,000 BTC for a pizza. The increasing acceptance led to a surge in Bitcoin's value, attracting more attention and investment. So everybody could easily use it. So that is why it became very popular. Next is empty GOX and major price volatility. MMT-GOX, a prominent Bitcoin exchange, was launched in 2010 and became the largest trading platform for Bitcoin. So MT-GOX was like they became the largest trading platform because they were the ones supporting Bitcoin. However, in 2014, MT-GOX suffered a major hacking attack, resulting in a loss of approximately 8,50,000 bitcoins. So they lost a lot of bitcoins. So at this time, this event caused a significant decline in Bitcoin price and raised concerns about the security and regulation of cryptocurrencies. Now also there's a lot of hacking going on. So like they have hacked the BNB chain, the like Matic chain, everything. So Edge chain is most attacked as of now. So next one is government and regulatory response. Governments worldwide started to take notice of Bitcoin and began implementing regulations to address concerns such as money laundering and fraud. So the fraud can be done with like Bitcoin mixing. It's a concept. So once they mix the bitcoins, they will not know who the owner is. So that is the concept used for fraud. So the governments are trying to curb this fraud, whatever fraud is involved. In 2013, the United States Financial Crimes Enforcement Network issued guidelines stating that Bitcoin exchanges and administrators are considered money service businesses and must comply with certain regulations. So, Bitcoin owners and exchanges and everybody should, like whoever is selling or buying Bitcoin, they must follow some certain regulations. This was what the United States Financial Crimes Enforcement Network in 2013 declared. So, the regulatory landscape continues to evolve as governments strive to strike a balance between protecting consumers and fostering innovation. So they are trying to protect the consumers as well and also to give way to new innovation. So the next thing is Bitcoin halving events. Bitcoin has a predetermined supply cap of 21 million coins, and the rate at which new Bitcoins are created is halved approximately every 4 years. So it is like halving the event. So the halving event is actually the total supply cap of Bitcoins is 21 million coins. So the every time it is created new Bitcoins, and the approximately every 4 years it is halved. Halved means halving the creation, like one by two of the Bitcoins are created, like that. So the first halving event occurred in 2012 when the block reward reduced from 50 BTC to 25 BTC. So the first halving event like this, like one by two of what has produced, was like 50 BTC to 25 BTC, is was in 2012. So the most recent halving event occurred in May 2020, reducing the block reward to 6.25 BTC. So that is the correct reward for a block right now. So that is what is happening right now. The next thing is mainstream adoption and institutional interest. In recent years, Bitcoin has gained significant mainstream adoption, with companies like Tesla and Square investing billions of dollars in the cryptocurrency. So Tesla and Square, you all know Tesla. Tesla is owned by Elon Musk, and he's interested in Bitcoin, but he said that it was not good for the world, but it's okay. They're still investing. Traditional financial institutions have also shown interest with the introduction of Bitcoin futures contracts on major exchanges like the Chicago Mercantile Exchange. So, the Chicago Mercantile Exchange, they have shown interest, like a traditional finance into major exchanges are also showing interest. So increased institutional interest has contributed to Bitcoin's growing legitimacy as an asset class. So Bitcoins, it has not is controlled by any central authority, and it is flexible, so it is growing legitimacy as an asset class. Next, Bitcoin's impact on the society. Bitcoin has the potential to revolutionize the financial industry by providing financial inclusion to the unbanked and facilitating cross-border transactions without intermediaries. So the as I already told, it doesn't need a centralized authority. It also sparked a broader interest in blockchain technology, leading to the development of other cryptocurrencies and decentralized applications. So everything has a base. Every cryptocurrency has a base as Bitcoin. So the price and fluctuation of Bitcoins affects other currencies as well, cryptocurrencies as well. So it has led to the development of the other cryptocurrencies and dApps. dApps means decentralized applications. However, Bitcoin's energy consumption and potential for illicit activities have raised concerns and sparked debates about its long-term sustainability and regulation. So that is, everything has a negative side, right? So that is why Bitcoin is concerning for some, for the governments as well. Market volatility and investor sentiment. Bitcoin price has experienced significant volatility throughout its history, with periods of rapid price increases followed by sharp declines. So actually Bitcoin is not stable. It rises very high and goes very low as well. So that is the volatility. And investor sentiment and market speculation play a significant role in Bitcoin's price movement. So investors, whoever are interested, and the markets which are predicted, also play a significant role in Bitcoin's price. So it is important for investors to understand the risk associated with investing in Bitcoin and approach it with caution. Yeah, so basically, the investors have to understand the risk. It is not a stable investment, but still they can invest if they are ready to take the risk. Next, future outlook of Bitcoin. The future of Bitcoin remains uncertain with both optimistic and skeptical viewpoints. So it remains uncertain. We do not know if anything better will come or this will continue. Some believe that Bitcoin become a widely accepted currency and store of value, while others argue that it's a speculative bubble designed to burst. Okay, so basically, it's there. Some say it is going to be a great thing. Others say it's just going to be burst anytime like a bubble. As technology and regulation continue to evolve, the impact of Bitcoin on the global financial landscape will become increasingly apparent. So the influence of Bitcoin is already there, and it also will increase. So let's see what the future of the Bitcoin holds. Next, references. The references for this was Nakamoto S 2008 Bitcoin, a peer-to-peer electronic cash system. And the Popper and 2016 Digital Gold, Bitcoin and the Inside Story of the Misfits and Millionaires Trying to Reinvent Money. Vigna P. and Casey MJ 2015, The Age of Cryptocurrency or Bitcoin and Digital Money are Challenging the Global Economic Order. So that's all. Thank you for attending this presentation. Thank you.